Hi everyone, welcome to our new episode, and today we will be talking about the forms and activities in a business organization. So, when we are dealing with transactions, we are dealing with organizations, and the organization's type or structure depends on the management or depends on the owner and its intended purpose. Now, before we define what a business organization is, let me first discuss to you the concept of economic entity or entity concept. This is one of the underlying assumptions in accounting or the fundamental concepts. In this concept, the transactions of the owners should not be mixed with that of the company. So the company is not equal the owner. There are separate personalities. So we treat the company as a separate person, a separate business. Or in terms of other organizations, let's say I have a family business and we own a lot of businesses. Transactions of different organizations should not be accounted altogether. So we treat one company separate and apart from the other businesses. The same with your personal transactions. Now, if you are an entrepreneur, if you are a sole proprietor, you have a business and you are your own owner, you are your own manager, your transactions, your personal dealings with other persons or other parties should not be mingled, should not be recorded in the books of your business. So they should be separated. So that is what we mean by the economic entity concept. Now, because we are dealing with business organization, let us define what a business organization is. And when we are discussing a business organization, this is an organization, an entity, or somebody, or someone, or something that uses economic resources that may be in the form of money or properties or both, and labor, expertise, or skills in order for you to provide for goods or to deliver services. Now, the forms of business organization may be according to ownership or according to type. Let's deal first with the forms of business organization according to ownership. And in this case, we have three classifications. There is the sole proprietorship, there is the partnership, and there is the corporation. So what about the sole proprietorship? When we are dealing with a sole proprietor or a sole proprietorship type of business, there is only one owner. And that owner we call the proprietor. Normally, if you are starting up your own business from scratch, if you have a little capital to start a business, you are your own owner and that is a proprietor. The owner is also the manager, and since he or she is sole in this purpose, he is purely responsible, solely responsible for all the actions, transactions, and the profits or losses of the company. Okay, so that is sole proprietorship. Now, when we are talking of partnership, we are talking about partners. And the owners will represent two or more persons. Now, let me emphasize this, two or more persons. If you ask, if you are asked, can a partnership be composed of 20 persons? The answer will be yes. Can a partnership be formed by 30 persons? Technically, yes. Because by definition, two or more persons. So there is no limit. However, in cases that there are a lot of partners involved, they may have to reconsider the business structure if they will still retain a partnership type of business or other type of business. But by definition, again, two or more persons. And the owners are responsible for all actions, transactions, profit, and losses. So they are all responsible. Okay? Now, for partnership, you will be dealing with it there is a separate topic or separate subject for it. It depends on your course if you will have to attend that specific subject on partnership and corporation. Or depends also on the syllabus of your school if it is included in this basic accounting. Okay, now this is the third type of corporation, and this is more of applicable for a lot of individuals. In this case, the owners are called the shareholders or stockholders of the business. And they represent 5 persons but not more than 15. However, this ownership in terms of the number of owners is based on the old code because recently the Philippine Corporation Code was revised. So we already have a revised code, and in that revised code, the 5 persons has been changed and converted and replaced by the term any, so that a corporation can be created even if there is only one person. Now, we won't be dealing into the details of it, into the technicalities of it, but more of the structure only. Owners are not responsible for the corporation's debt, unlike in partnership and sole proprietorship, wherein they are responsible for all the actions. Now, just to recap, the forms of business organization according to ownership can be categorized as sole proprietorship, partnership, and corporation. Now, let's proceed with according to type. And we have the merchandising, the service, and the manufacturing. When we are talking of merchandising, this is a business engaged in buying and selling of products. If you're a merchandiser, you buy products that are readily available, finished goods, then you will sell it with a markup for you to generate profit. So that we call it trading. So buy and sell or trading. And some of the common examples of this are convenience stores, sari-sari store, if you are familiar with the term, hardware, and other merchandising companies. Now, for the service type of business, this is doing something for someone for a fee. So basically, we are using our labor, our skills, our expertise to provide for a service. And we are not providing a product here. We are not providing a tangible item. We are providing an intangible item in the form of our services. Common examples will be the call center or business process outsourcing. We call it BPO. You have your accounting firms, your law firms, your IT firms, and other service-oriented businesses. So we do something for someone for a fee. Now, the last item under the according to type is the manufacturing. Under a manufacturing type of business, we buy materials and convert them into a finished product, after which we sell it to our customers. So this is more of production. If you are familiar with factories, with manufacturing plants, these are manufacturing types of businesses. You convert raw materials and then you make a product out of it. And there are a lot of products that you will see on your day-to-day living. Whether it is in your house or it is outside, wherever you are, you will see products that are made because of this. Of course, because they are being manufactured. Your cell phone, the TV, the appliances, etc. They are products of this type of business. Now, just to recap, we have the merchandising, the service, and manufacturing. So before we proceed with the activities in a business organization, if you have any questions, please let me know using the comment section or through our learning management system, which is Canvas. This is for my students, by the way. Let's proceed. The activities in a business organization can be categorized into 3. But before we deal with that, I just want to emphasize that in a business organization, the economic resources are just inflow and outflow. So that there is a cycle of economic resources. We receive resources, so there is an inflow, and then we let go of certain resources. That is your outflow. Take for instance, I have this illustration. This is a business. When we needed suppliers and providers when we purchase from them so that we can deliver goods or provide for services, we pay for the purchases. So we let go of some economic resources, usually in the form of money. So there is an outflow. But in exchange, we receive something. So you give up something in exchange for something. So there is a cycle. You give something, there is an outflow, but you receive something, there is an inflow. In the same manner, when you provide for the services or the goods to your clients or customers, the clients will pay you. So you receive cash or other resources, and then you deliver a product or you provide for a service, there is an outflow of resources. Again, you give up something in exchange for something. So basically, there is a cycle, inflow and outflow of economic resources. Now, these are the three activities in a business organization: the operating, the financing, and the investing activities. Let's talk first the financing activities. And by financing, we mean those methods an organization use to obtain financial resources, such as the borrowing of money, either from the owners of the business, from the investors, or from the banks, and the repayment of loans. When you are settling your loans due from the banks or from the owners. So these are financing activities. The second one is the investing, and by investing activities, these are the selection and management of long-term resources that will be used to develop, produce, and sell goods or services. So in here, we are talking of long-term resources. And some examples are purchasing or buying of land, equipment, machineries, building, and the disposal of these resources when no longer needed. So, for instance, you purchase a land for you to develop your own property, which will be eventually sold. So, these are investing activities. You purchase computers because you need this in the business. You will be utilizing this in the long term. So, these are investing activities. Now, the last item in our agenda is the operating activities. And this represents the life of your business. Because in this case, we use the resources to design, produce, distribute, and market goods and services. So common examples will be your purchasing or the procurement of your items that is needed for the business for you to provide for goods or services. And then the distribution of these goods, or if it is not yet sold, the marketing activities, advertising in order for us to sell the products or to sell the services that we provide. So these are your operating activities. Now, don't worry. If you are confused, you may go back to this PowerPoint presentation, to this video lecture, so that you can revisit my discussions in the earlier minutes. Again, thank you for learning. Thank you for watching this episode, and I hope you learned something from me. Bye-bye.